What's going on, YouTube? Today, I want to tell you what you need to know before you start trying to trade penny stocks. I think these 5 things will drastically help you if you're just starting out. So, number one is most of these stocks are junk stocks and they're just trying to have pumps to get money for their company. Now, if you look, this is a 180-day chart of a recently spiking. Well, the reason I was watching it was because it had a spike 2 days ago on Thursday and then it fell back Friday. But just to show you guys, this is just one. But look, in the past, it spiked and it always falls back down. Always, like, what I mean by most of them, not all of them, because some of these companies will turn out to be something, but most of them, they do this to get money. They come out with news or something, so a lot of people buy it thinking it's going to be like the next Amazon or Microsoft, and then it turns out to be nothing and everyone just loses their money. But like the point I'm getting at is see how it spikes and it falls right back down to almost where it was, and then it looks like they're trying to spike it again. I have a list here that I just want to show you guys, like they all do this. Here's one again. Spike, fall right back down. Spike, fall right back down. This even fell lower than it was. Another one. This one, it's like the first time it's ever been spiking, but spike, this one's trying to fall back down after it just spiked. They all of them do this. They all spike and fall, spike and fall. So that's number one. Most of them are junk and they're just trying to promote. So, number two, these stocks move very, very fast and they're hard. If you're a beginner in the stock market, they're very hard to actually make money on because people just buy them and think they're going to go keep on going up, and that's how they lose like their whole accounts. Like that's why people are scared of penny stocks because they buy them and they think they hold them. Like no. People that buy penny stocks, they're in and out sometimes in minutes. Sometimes some people do hold for days, but there's different reasons and different tactics behind it that I'm not really going to get into in this video. But you need, like, if you're trading these, you're a day trader, a penny stock trader, you want to hold for as short as possible and make a quick profit. And they're very volatile, and which means they move up and down a lot, and they're very manipulated by news. So a lot of times, if you see big news and you see it early, you can buy the stock, and then hopefully other people see the news, and then you cash out. So, for example, I'll go to one that I saw on Friday. There's a couple, but here's one on Friday. And that was the day. We're going to go show you guys how you can trade this. We're going to go down to a day-minute chart. So, right as the market opened on Friday, this thing took off. Now, you do not, I repeat, do not just want to buy because it's going up. They fall sometimes, most of the time, faster than they go up. But the point I want to get to is, like, your money, if say you're in this, you bought it right when the market opened, you want to be cashing out probably in here. And that is a 57% increase already. If a stock's up that much on a day, it's not the wisest decision to buy up here. Because if you bought up here while it's spiking, and then you saw it falling, you sold down here, that's a 10% loss. So it's hard to see these like right away, like quick. And most successful day traders, they're only looking to make like 30 cents a share when they're looking for these profits, they're just quick trades. This is a minute candle, so 1, 2, 3, 4, 5, 6. In 6 minutes, this stock rose 50%. That's what I mean. You can be in and out. 6-minute trade, and you can make 50%. That's pretty good, but you have to be careful because you buy up here and it falls, you kind of probably get scared and then you want out. Like, see, if you held this all day, say you bought here, yeah, you still made a little bit of an increase, but you would have had to buy it perfectly. Still would have made about 20%. but just like if you're trading penny stocks, you're probably going to be in and out very, very quick. Number four, like profitable, what like I already went over it, but profitable traders, they only look for they look all they look for is small gains. They try to get small gains that just add up. And what I mean by the small gains, okay, say you get in, like that's a, I mean, it depends how much the price of the stock is, but that's a 10% gain in 5 minutes, 4 minutes. So you're not looking to be in very long if you're day trading. You have to, it's something else too. You can't walk away. If you're in, you have to watch it because they can fall. And I mean, they can fall fast. And that's what you need to be worried about. Even this one. Look at that. Look how fast that fell. I mean, yeah, they go up, but like they're quick. You need to be watching. You need to be paying attention. You need a decent amount of money. Um, I wouldn't recommend buying anything less than about 400 shares. So I mean that could limit you to. I don't know how much money you guys have, but put it this way: if you buy 400 shares and it goes up by 30 cents, I mean that's $120 gain. And then minus commissions, you're down to a little over $100. So you need to buy a lot of shares when you're doing this. You can't just like when day traders, people that do this for a living, they honestly buy like tens of thousands of shares. A lot of traders they'll buy 15,000 shares at a time, and that's a lot. Yes, that's a lot of money. I don't have that much money just to throw into a penny stock, but the people that do this for a living, that's how they make so much money. They don't just buy like 5 shares. You can't buy little amounts of shares and make money trading penny stocks. I would not recommend going in less than 400 shares. And you'd have to know when you're going in, when you're planning on cutting your losses because honestly, I mean, you can't be right all the time. So know when you cut losses and know how much you want to gain. Like I said, go for like 30 cents every time. If you think this stock can rise 30 cents, then it's probably going to be a good trade. And don't just try to don't the reason I say 30 cents is because a lot of people, unsuccessful traders, they hold too long. They try to get too greedy and try to make too much. It's the little wins that add up over time. And that's how you'll make money in stock market. You can't just even my other videos, you don't hold and hope. Like if it doesn't work how you thought it was going to work, get out of the trade. Make your losses small, make your wins bigger. And one last point about penny stocks, if you're getting into them, I would not recommend getting in anything with less than 50,000 in volume. Volume is very important in these penny stocks because if you don't have the volume, you can't get in and out. In case you don't know, you have to, when you're selling your stock, you want to get out of your position, someone has to buy the shares. So if there's no one buying shares, you're stuck with them until someone gets in. So that's why you need to trade these stocks with high volume, at least 50,000 in volume. If it's less than that, there's a good chance you wouldn't be able to get out and you could just, I mean, you could lose all your money. It depends, it depends how far it drops and when someone's willing to buy. But you have to wait till someone's willing to buy. So that's all I wanted to let you guys know. Kind of just a little overview of penny stocks, and if you've never traded a penny stock or knew anything about them, I hope that gives you an idea. So real quick recap. Most of these are junk stocks that no one, they're trying to make money. They're trying to make a quick profit for their company, so they go up quick and they fall quick. Number two, they move very fast. You have to pay attention. You have to stay at on your phone, computer, wherever you're trading. You can't. If you walk away for a couple minutes, that could be a big loss. It could work the other way too. It could be a big win, but I wouldn't recommend walking away once you get into a position. Number three, I don't know. I just feel like they usually fall faster than they go up. So be wary of that. Number four, profitable traders look for small gains, and the small gains add up over time. Don't look for that home run every time. Make your quick profit, move on to the next one. And number 5, make sure it has high volume. I would say at least over 50,000. And oh yeah, the last thing I want to say, if you don't know, if your account is under $20,000, your trading account, which I'm expect like this channel is for the beginning investor, so I'm assuming most of you do. But anyways, under $20,000, you can only have 3 day trades, which means you can only buy and sell in the same day 3 times within a week. Say Monday you had to trade, Tuesday you had to trade, Wednesday you had to trade, and your account's under $20,000. You are not going to be able. You can trade, but your account will get suspended, and then you won't be able to trade at all. But you have to wait until you have a trade available, and you can see that in your account info if you use TD Ameritrade. So that's it. I just want to tell you guys a little bit about penny stocks if you had no idea what they were and how people made money off of them. So if you like this, leave a like, comment below, subscribe to my channel. I'm going to keep on teaching you guys.